Hey everybody, I'm here with Lisa Hutt. Lisa is a CPA and one of our Sage Intacct construction experts here at Bangor. And today we're talking about WIP, or work in progress. Some people call it work in process. As a disclaimer, this is not financial advice. If you do have issues with your WIP report from a numbers standpoint, please advise with your accountant or somebody that you hire, like a CPA, to get the qualified information that you need. So Lisa, what the heck is a WIP report?
Yeah, Reed. So a WIP report, work in progress report, sometimes called work in process report, is a snapshot of your projects, your financial aspects of your projects. That's a very general, high-level explanation. What work in process or WIP or work in progress does is it helps you properly recognize revenue on your projects depending on how far along you are. So if you're an owner of a construction company or you're a project manager and you're running a project, you put together a schedule of values, you bill your project, and you might be able to overbill on certain line items. For example, you might do a lot of your earthwork, you might do a lot of your like concrete and things like that at the beginning, and you can front load your schedule of values to bill ahead on some of those so that when your costs come in the door, your billings can far exceed, or you can make it to where your billings are going to equal out and be similar to those costs. But when you're in an overbilled state, or you might have to underbill in certain scenarios, you are not properly recognizing revenue. So your billings is an indicator of, I'm going to collect that much from my owner that month. I'm going to bill out, a couple $1 million in May, hopefully collect it in late June, but my costs might only have been $500,000. So I'm in an overbilled state, more than likely. So you have to properly recognize revenue on a percent complete basis, and not necessarily what you send out as the bill to the customer.
Makes sense to me. So this is kind of a tool that you would use in combination with the other reports we've been talking about too, right?
Right. So basically you want to use it in conjunction with your AR agings. You've got certain things you want to do with this WIP report. I'll use that term in this video here. Basically, you want to make sure you do have this tied out to your financial statements, which I'll go through. There's also some red flags you want to be aware of when you are looking at this before you make this revenue adjustment into your monthly books.
Awesome. Okay. Well, let's just dive right into it.
All right. So you can see on my screen here the WIP report, or work in process report. And I've got my list of all my active projects. My project contract is my revised contract price. So it uses my change orders, my original contract price. So this is the current, as of the time period I ran this is the current revised price to the customer. This is my project estimate, my costs, what I think I'm going to expend to get this project built on my company's side. Okay, so I'm a general contractor, I'm a subcontractor. This is what it's going to cost me to do this project. And then you've got some calculation columns here. So gross profit and then gross profit percentage. And then what this specific report does is it lays out your current month billings, your year-to-date billings, your job-to-date billings. So you do want to do some tie outs, and that's why there are multiple time periods of your billings for current year-to-date and job-to-date. Same with costs.
If I'm looking at, like, let's say the estimated gross profit percent, is that actually giving me a good projection until the end of the project? Like what I could expect as a shareholder of the company, maybe as the percent of profit on that particular project?
So, very good question, and a loaded question too.
Okay.
So the project forecasting in conjunction with your WIP is key to having your revenue recognition be proper. So what I mean is if this estimate is inaccurate, or if you don't have all your change orders in, and you have the related costs built in, your estimated gross profit will be skewed. So there's a whole series we do on project forecasting that makes sure that this project estimate, which we term that project forecast, that project forecast is as current as possible, or however often you as a company reforecast your jobs. So I no longer think I'm going to be at 1.379 million. I might be at 1.5 million, next month. So make sure to update this column with that appropriate forecast, what you really think you're going to do.
Makes sense.
At that point in time, because things change. Buildings are difficult to build, or whatever you're constructing. It's not an easy thing to do. So you have costs you have to eat at times. You have change orders. It's just part of the process. So.
Yep. Awesome.
Okay. So basically, with work in progress, WIP, you want to have your percent complete calculate. Usually it's calculated your costs divided by what you think you're going to have for costs. So I've got $550,000 that came in the door from subcontractors that billed me, AP bills, utilities, all that stuff that's estimated. I think though at the end I'm going to be at 1.38. So 550,000 divided by 1.38 is about 40%. That's about how far along it is based on my costs. Okay. So if your subcontractor walks the job site, or if your subcontractor is on site and they don't end up billing you and they did the work, that'll be skewed because you're not really calculating far enough along. So it's dependent on your costs coming in the door and that your subcontractors are billing you and you're getting those costs in the appropriate time period you do the work. So it's not perfect, but usually it's pretty close if you have good subcontractors billing you well and you have your costs in your accounting department putting those costs in the proper period. Okay, so percent complete, then you take that times your contract price. I get my revenue earned. Okay, so this is what I should recognize on my financial statements for revenue, not what I billed, which might not necessarily equal, and a lot of the time does not. Unless you're doing a time and material cost plus type of AIA job, that they might equal, but usually you're going to have some sort of adjustment. So in this scenario, I have not billed enough because I should recognize 1.4 million, but I've only billed 1.25 to the customer. So I've got to make an adjustment to the income statement to bring my revenue up, 210,000. Okay, so that's how WIP in general is explained and described, if that makes sense.
Maybe go a little bit deeper there. So why are we showing that we've earned more revenue on a statement, for instance, than we've actually billed?
Yeah, so like I was kind of saying at the beginning, if you have a schedule of values and you might put, $500,000 in earthwork, but really you're only going to spend and you're only going to have 300 grand worth of work. I can bill that up front. I can bill that all, pretty much maybe in the first or second month, right? But one of my other line items that I do towards the end of the job might not get as much revenue in that trailing last month of the job. So I might be in an overbilled state at the beginning of the job, but it's going to catch up at the end. So my billings can be what my owner allows or my customer allows me to bill, what they've agreed to. They might also want you to bill ahead if they have a grant or if they have some other type of fiscal period, if they're doing a school. A lot of the time they follow the calendar or fiscal year of the government. So there's times where customers ask you to overbill them as well.
You might be
overbilled.
So
those are some scenarios.
Makes sense.
Yep. So that explains the meat of how this works. I do want to point out percent complete can be done differently. There are different methods based on hours. So if I estimate 5,000 hours, it takes me to complete a job and I've got 1,000 hours into it, you can do the calc that way instead obviously you'd have a different report showing here with hours, right? You can do unit based, you can do different percent completes. Okay. So there are a few things you want to be aware of when you are looking at this before you recognize and adjust your revenue using this information here, this over under column. First, you need to make for sure that my contract price at least equals my billings, right? I'm billing over my contracted amount. That doesn't make sense. So right now, this one is higher than the contract. I've got to put a change order in the system, got to do something to bring it up. Maybe I have a duplicate billing on accident. Maybe I've overdone something. A good accounting system wouldn't let you do that, by the way, but you've got to bring your contract price up more than likely is the scenario here. Okay. So another one you want to be careful of, and I'm just showing this as an example, but another column you can add on here is if my costs are greater than my estimate. Okay. I don't have my budget brought up, my estimate, my forecast, those are all synonymous terms that could be here. This number is not at least equal to this 10.6. I got a problem. So you do need to do some analysis and some looking at this report to make for sure that certain things are done as far as making sure this is at least equal to my billings and my costs, at least the estimate is at least equal to or greater than my costs. So with software, you can do things like this where you can highlight, okay, this is a problem. Okay, so this was the one that was my job to date billings were too high compared to my price. So you could do some conditional formatting, for example. So I just wanted to show that you do have to do some analyzing of this before you book the actual revenue adjustment entry. Okay. All right, so I'm actually going to flip to Excel to complete this discussion because there's some other things I want to show. So this is similar to what I was just showing inside of Intacct. This billings in excess and costs in excess they're actually accounts that are on your balance sheet. Okay, so this 4.9 and this 37 million should be on my balance sheet. And I'm sorry, I'm in the wrong column. It's these two. So these two over here, my cost in excess is an asset, and my billings in excess is a liability. These should equal what's on my balance sheet. My year-to-date billings, my year-to-date costs should be what's on my income statement. So I'll show that in a second. So costs in excess of billings is what I haven't billed enough. It's an underbilling. So you can see 1.25 is less than what I show for revenue that I need to have booked. So I have an underbilling here. So think of costs in excess as underbillings and think of billings in excess of overbillings. Okay, so those are two terms that people use synonymous with costs in excess and billings in excess. Okay, so when you're completing this, you want to make sure, number one, like I talked about, your billing number is less than or equal to your contract and your costs are less than or equal to your estimate. So step number one, get those all cleaned up, review all the numbers. Does the GP make sense? Does my percentage make sense here? Does anything look strange? Okay, I'm good to go. These are all corrected. Now I can book my entry to create my revenue adjustment on my balance sheet and my income statement. Okay, so there is a whole video course on how to properly tie this out and do this. But at a high level, you want to make sure these two numbers here are on your balance sheet. They match your WIP schedule. So there's my costs in excess and my billings in excess are down here. Okay, and then on my income statement that I've tied out my billings and my costs. Okay, so when you go back over here, I've got my billings and my costs. So you want to make sure this schedule is saved. It's it reconciles. You close your period in your accounting system. You make for sure that you have a good copy of this that agrees to your balance sheet and income statement that are final.
We want accurate, right financials. That's goal number one in this. Obviously, the work in progress makes that possible. Well, hey, thanks, Lisa. I appreciate your time. And, if you are interested in learning more about what a WIP in progress report and how that interacts with Sage Intacct, like and subscribe to this channel. And like this video, leave us a comment if you've got questions on it. We'll get that in front of Lisa to get some answers in place if you've got just some general questions on how a WIP should work. If you've got detailed questions, things like your billings and your costs not reconciling to your income statements, for instance, definitely, or your balance sheet, definitely reach out to your CPA, hire somebody who can take a look at what your problem is. Thanks, Lisa. Appreciate your time.
Thank you.